Okay, ladies and gentlemen, we're moving on to week 8 of IHP 510. As you have seen during the course of the last 7 weeks, we've concentrated on market segmentation, communication channels, messaging, appropriate use of and development of messaging, and what market we want to target, what product we want to target that particular market with, what product you have suggested for each of your individual marketing projects. Many of you have emailed me and have decided to change your particular focus on your service or product. Many wish to narrow it down. Some wish to change completely. I am not adverse at this point if you want to change your final project to reflect a service or product for which you will have enough information through research to support and defend your particular choice in your marketing plan. So moving forward today, now we're going to look at the money end of things. How do we create a budget for, and how do we allocate funds and support our allocation of funding for a particular marketing project? The case study in your textbook focused on a multi-facility health network, particularly looking at the Pawnee Medical Center, looked at a doctor's lecture series. We'll talk about how that applies a little bit here when we look over some of the various aspects of things that we need to monitor and to analyze to support our decision in our marketing efforts. As always, I have put forward your work for this week. This is a light week in respect to you only have the one worksheet to work on. I would also suggest that during this week you take the advantage of the extra time and look at and review the comments and suggestions I made to improve each of your milestones. I do, when it's all said and done and the dust settles and I review your final projects, I do review the previous previous suggestions and content that I have suggested be changed within each of your assignments. And as such, I would expect that you go over those and that you adapt and make the appropriate changes to improve your paper. And that'll be reflected in your final score. Keep in mind that the elements that we're able to grade on the rubric for each milestone are not as comprehensive as the final project. So looking at your assignment for this week, you are basically looking at and going to create a budget for the 3 priorities you previously identified from the marketing exercise for the Missouri Department of Health. When we look at marketing and budget, we have to look at several elements from the standpoint of a marketing manager and what a marketing manager must do to create his or her budget and to defend that budget within the organization. For your final healthcare marketing plans, you are going to be asked to prioritize marketing tactics for a specific budget. The worksheet task in this module is an important exercise for you to understand the process as you gain insight how healthcare organizations allocate funds for their marketing campaigns and projects. The exercise and material from week 8 is designed to enable you to articulate why one marketing technique might be better than another based on your target market demographics and available funds. Marketing directors are accountable for expense budget cost incurred by that department, and all members on the marketing team are accountable for project departments that the departments undertake. Knowledge of planning and budgeting is critical in the marketing manager's position. They must be able to have a sufficient degree of financial literacy and comprehensive financial matters relative to the operation of and delivery of marketing campaigns and projects. A budget is a statement that indicates financial administration of the available resources for a set period of time and serves healthcare marketers as they plan and assess their marketing efforts. Budgeting is a process that is much a science and mathematics as it is instinct and an art. Those that have been involved in marketing for years will be much more inclined and much better at the budgeting process and coming within or delivering under budget. You've got to remember your organization has limited allocable resources, and that's why we get our definition of economics. Economics is nothing more than the delivery of assets under conditions of scarcity, or the assignment and use of available resources under those conditions of scarcity. A departmental budget, as opposed to an organizational budget, is a micro budget within the organization as a whole. The organizational budget, of course, will be set by the corporate board of governance and financial officers, and will include each and every department's request for a budget. Whether or not that budget will be granted will be incumbent upon whether or not you can defend or support your decisions relative to those resources you are going to expend. A departmental budget presented for preparation of the organizational budget must be realistic and not inflated, thereby requiring marketing managers to be financially literate. I want to give you a little bit of a caveat here. Sometimes we have the mindset that if we ask for more, we'll get less. So we might as well inflate or ask for more than we really need, knowing that it will be cut. This can be a very problematic approach to budgeting within an organization. Because if you could imagine every department within the organization inflating their budget, that really puts a wrench in the works when it comes to final allocation of resources. And yes, your budget may be cut. Whether or not it's cut, however, will be depending on whether or not you can justify and defend those resources that you are requesting. And the things we look at when we consider a budget are return on investment. The return on investment is the measure of the investment in promotional activities compared to the profits generated for a certain period. Return on investment is an approach to monitoring the performance of marketing expenditures. Many organizations will create a threshold. If you do not have return on investment of X percentage, we will not justify or continue a particular marketing campaign or project. It's just a matter of you have to cut the fat, and sometimes you have to cut in those areas that cannot be defended and that are a losing proposition. We also take a look at variance analysis, and the Pawnee Medical Center has a very good example in your case text book about variance, where you either under or over allocate assets for a particular project. And the Pawnee instance, they actually didn't allocate enough funds and they were over budget based on actual attendance. If this is the case, then you need to use that variance analysis and the fact that you overperformed the amount of people you attracted to the facility as an argument to justify that your request for additional funds for that particular project are indeed justified and warranted based on the results of that particular campaign. When we look at sales analysis, we can look at sales analysis by product, service, salesperson, departments. A common method for monitoring marketing activities and performance is indeed the sales analysis, which compares the actual sales generated with goals that were established. Many of you remember the SMART goals that we established. Not only did we establish X number of people will be reached by our campaign, but that was combined with a sales goal or a marketing goal. And when we look at that sales analysis, it's useful to examine sales at a level below that of gross sales, such as by analyzing the results of one or more criteria for that particular project, such as product line analysis, customer size, geographic region, and the discount level if any discount is involved. The profitability analysis is a useful method for monitoring marketing performance, and it incorporates the factor of profitability, which examines the profitability of sales by customers, regions, products, or salespeople. Another method is allocation of cost, and this is becoming more common in many organizations. We are looking at cost basis, and we're looking at, when we allocate cost, a full costing analysis. And we basically, in this, we assign both direct and indirect cost for each particular project. And when you look at the sample budget and the budget provided in your worksheet, they do indeed take into account indirect cost. Direct costs include any labor, technology, or supplies pertaining to a specific clinical program, which resources are allocated specifically to that program. Indirect costs are costs associated with administrative cost, areas of shared resources. They can or cannot be indirect in relation to advertising. Direct cost for advertising is indeed something you will see. For example, if you're pushing a specific product, the commercials are designed for that specific project, but additional cost or indirect cost could be assessed for using interdepartmental resources. If a program manager makes a sales call, for example, on all possible accounts in an occupational medicine program, that person's salary would indeed be a direct cost. An example of an indirect cost here are the fixed costs that cannot be related to just one product line or service program. So if this particular individual, for example, reports to a specific cost center and the administrative management salaries are not directly assigned specifically to that program because it's a shared management situation, that would indeed be an indirect cost. When we look at contribution analysis, we're looking at a way of assessing the market performance of a service or multiple service through the contribution of profit to fixed costs that that particular project would deliver to the organization. And we look at the percentage variable contribution margin here, which shows the percentage of each additional sales dollar available to the organization to cover its fixed cost as a result of that particular project. We are looking at a sample of a departmental budget here, and that departmental budget is based on Pawnee Medical Center. And as you will see, each particular aspect of the physician campaign, the physician information campaign that Pawnee used, is accounted for and creates the total budget for that particular project. The whole department would then, of course, actually I misspoke. I have to back up a minute. This is the whole department budget that includes each individual sub-promotional activity. And you'll notice here they have the physician outreach program, which would be the Pawnee Medical Center that they have in the case study, which is $40,000 of a $508,600 budget. And you will recall, if you review the textbook, that they actually had a $500,000 budget. They are asking for more. Can they justify more? Well, one of the means that they could use for justification is the variance analysis, for example, which indicated they had more attend than were originally budgeted for. And that could justify and support. Also, indirect marketing benefits can be a justification. So if they bring 400 as opposed to 300 people into the facility, it's going to cost more for that particular event, for food, for promotional material that they hand out. Maybe they'll give a mug or some kind of thing with the logo of the hospital and the campaign. All of that goes up when you have higher levels of participation and attendance. Also, the indirect costs. When we measure direct benefit, it's easy to do on return on investment and profits. However, we often overlook the indirect benefit that can come from marketing. And I want to look back specifically at relationship marketing. Is there a direct benefit to the Pawnee Medical Center Physicians Outreach Program? Absolutely. The doctor that came in and talked about diabetes increased the load on the department within Pawnee Medical Center that specifically handles diabetic patients, which could be primary care physicians. It could be above and beyond to the specialist in diabetes, the endocrinologist, and it could involve actual pharmaceutical returns. But when we look at indirect benefits. What about that relationship that we're building with the patient, which may involve and include purchases not associated with diabetes? Maybe they're going to use the optic center after being on our particular facility and seeing that we have an optic center. Maybe they will use in-house pharmacy. Maybe they will buy things at the gift shop. There are a lot of different aspects of marketing that will return an indirect result. And when we're considering overall benefits, we must look at those indirect benefits, and those may also serve as justification for additional requested amounts in our particular budget. The Module 8 worksheet is pretty straightforward. I want you to take a look at it. You're going to look at your marketing demographic department, marketing technique of the 3 priorities you selected in Module 6. You're going to next illustrate how you would allocate a portion of the funds for each priority, and be sure to consider direct, indirect, or hidden cost. And you'll see some examples stated in the budget below. And finally, describe why you made the budgeting choices around prioritization and specific cost. And that's where you would explain under the discussion of each priority. You're given an example budget. Please keep in mind that you have $100,000 total. If you were to divvy it up by the number of priorities, that would be $33,300 each. However, your priorities may dictate use of your funds differently, and your particular medium that you have chosen for the channel of communication on that particular priority. And I would suggest, ladies and gentlemen, this is not just picking numbers out of thin air. You may have to look at, you might have to research, if you proposed a billboard, what is the average cost per billboard monthly within your geographic region. You may have to look at other costs such as printing costs. What are the average cost of printing within your particular area? These are all things that when you present a budget, you also present information supporting the amounts that you have stated. You will have to get estimates from various providers. You will need to get contractual or actually pre-contractual commitments if you're going to do an advertising campaign with a particular radio station. Normally you can go online and you can look up radio cost per minute. It will vary by station. So one of the things that you would consider is, if you're doing a diabetic clinic, what station would you want to advertise on if you are using radio media? If you're using TV, what would make the most sense? So if you're looking at a geriatric emphasis, you might look at Fox News, Fox Business, Nat Geo, stations that older people are more inclined to watch. If you're looking at for a program for teenagers, then you might want to look at MTV or other music stations that appeal to that particular demographic. So you're going to have to do a little bit of research just beyond picking out numbers and plugging them in here. You're going to have to justify why you chose the media. You're going to have to justify your amounts if you were to present this. So I would like you to take some time, research the different costs, use those as a basis for your final budget. And again, if you have any questions, please contact me at p.vanash@snhu.edu, or please feel free to call me at 801-940-2531. As this is going into the last 3 weeks of the module, I am taking my schedule and revising it so I have more hours available to work with students directly. Please avail yourself to my offer, particularly if you are struggling in this class. I would like to improve your grade on your milestones. I am more than happy to take the time to sit down on the phone, go over with you, share what I can to make sure you maximize your points on your final project. And the final project is a big ticket item, so let's make sure you maximize your points there. Have a good day, take care, and we will see you next week.